loaded up here, and here we go live. Excellent. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market stream. Before we get started, I would like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is 8 p.m. on Sunday, and we are about to do the damn thing. Obviously, since our stream on Wednesday, we have had quite a bit of volatility. Basically, everything had been playing out according to plan. The dollar has gone absolutely parabolic. We are getting ready to test key resistances. 10-year is still holding that same support line for now, but there's definitely still some potential for a continuation. And we have seen basically all markets selling off. I was directly speaking last week about how the markets look like shit, and I was not seeing anything really looking good at all. And as you can see, I was correct. The Fed meeting, I guess everyone's saying that's what spooked markets. All the analysts are saying that the dollar got a knee-jerk move higher. I would not call that a knee-jerk move. I would say it's basically the beginning of what we've been expecting, to tell you the truth. So let's jump into it. See a couple of the regulars over there in chat. What's up, bros? Good to see you. Appreciate y'all tuning in and being here for the start of the stream. Let's do it how we always do. Gonna shoot for like a mid-length stream, somewhere in between. Before we get rolling though, I do want to just talk about something else real quick. Just a quick little mention. I'm extremely careful with online security and whatnot. I do not click any links ever. I do not, if I get an email from a credit card company or my bank account or anything like that, any kind of notification or anything, I do not click on those. I literally will go to my actual account and log in myself. I do not download weird stuff off the internet. I do not go on weird sites on the internet. I have multiple computers that are completely separate from each other with different accounts that do not have access to each other. I use multiple like two-factor authentication and whatnot. I take literally everything possible as far as like precautions. And I have had 2 incidents in the last like week basically where some of my information has been compromised. I had just earlier today, not an hour ago, an issue with Walmart, where basically I had someone placed a digital order through my Walmart account. They purchased like basically like, I'm assuming they were like some kind of digital gift card. It said like Google Play. I'm not really sure what that is, but some sort of like digital gift cards. It was a small dollar amount. I was able to cancel it immediately as soon as I saw it. And as soon as I contacted Walmart, they basically gave me an error message and said that they were having issues with their server and were unable to connect, so their customer service was not available at the time. So I'm assuming that Walmart has been compromised and there's issues with that. I also had very recently this week as well an issue with Amazon. I have an Amazon account. I purchase through Amazon on occasion, and somehow someone was able to essentially, using all my same information on my Amazon account, make, again, digital purchases, so they didn't have to worry about like shipping addresses or like telling on themselves or anything. They basically were just trying to send like digital stuff to themselves, and also signed up for Amazon Prime account, which somehow, strangely enough, when I contacted Amazon, I was not able to cancel the Amazon Prime account because they had activated two-factor authentication on the Amazon account, which I do not have on that Amazon account. Therefore, I was not able to access it, nor were they. So there's clearly a bunch of stuff going on. I mean, I'm not comparing it to like the severity of the pipeline getting hacked and all that stuff, but it's very clear at this point in time that these companies, no matter how big they are not taking the appropriate measures to stop this type of thing from happening. As far as I'm concerned, Amazon is 100% compromised and Walmart is 100% compromised. I deleted all my forms of like stored payment options and whatnot off of their sites, but I know for how careful I am that you know, everybody else should be careful as well, because if you're not that careful, you're probably extra vulnerable. I don't know if any of you guys have had recent issues like that. If you are, feel free to let me know in the chat. If not, maybe I'm just lucky. But again, I find it very, very unlikely that one of my systems has a Trojan on it or some sort of virus or anything like that. It makes a lot more sense to me that these sites are in fact compromised themselves. So, but again, I just wanted to mention that. Make sure you are taking appropriate caution and whatnot. That you're using every possible thing necessary to protect yourself, and also that you're monitoring any online accounts or anything regularly, so that you can at least nip them in the bud when things like this do happen. Try to catch it as quick as possible. Cancel your card or your account or remove it from these online services. So but I expect it only to get worse. It's very obvious that we have a bunch of weaknesses in our system in the United States. A lot of stuff is out of date or not been appropriately taken care of, as these companies are making millions, billions, hundreds of billions of dollars, and not taking appropriate security measures to protect your information. So anyway, let's jump into it. I did want to mention that though, as I found it absolutely crazy that I had 2 random incidences in the last week, one of them being today. And I just want to make sure that everybody else is taking appropriate precautions. So, all right, let's jump into it. So here's our 10-year Treasury yield. Not much has changed. That same area we got the bounce off of, we started to move a little bit on the Fed's news, and then we just came back down, and we're just right back down at that same fib level again. Like we have spoken about many times, the yellow Fibonacci's are important. The next one down here is at that 1.13 level, and the next one up, should we bounce here and move to the upside, is up at the 2.0 level. But in the meantime, we have our red fibs as well. The one was acting as resistance here at 1.63 and the other at 0.95. I do expect those fibs to basically just act as support and resistance. So we are now just sitting on top of support. The longer we spend at support, the more likely we are to break down from it, which would take us down to the yellow 0.5 or potentially as low as the yellow 0.3 or the red 236. So, but at this point in time, I think it's more likely that we basically got our initial move up here, a retracement, and then a second move up here, and then we'll come back down for a retracement. Now, how low we get, I'm not sure. It depends if we're looking at it as a 5-wave structure, or if we're just looking at it as basically just levels of support and resistance. But we basically have that reaction rally 1, and then the 2 retracement, and then the 3. Now, normally with the 3, you would only expect it to come down to the 1 on a longer time frame. We could easily get a wick down here lower and then have our 5 come up here. That is not a beautiful wave structure or anything like that. Also, we got such a violent reaction rally off that initial dump that you could, a lot of times you will have to ignore an initial squeeze or something like that. So there is a possibility that we're going to get something a little more like this, which would actually look a little more structurally sound. But again, I don't like to just ignore data points or anything like that. But just looking at it and the violence of the move and everything that was going on, sometimes you do have to look out for those little outlier moves, etc. So I'm expecting something basically similar to this over the long run. But it is possible that the 3 is not done and we just continue up here to the top before we get a retracement, in which case a deeper retracement would still put us at that initial 1 point. But we do have to wait and see. I don't expect rates to just randomly jump up here all of a sudden or anything like that. I think it's going to take a little time before we get that move. But again, we are back inside the bearish control zone. We are at support, so it is possible that we rally from here at any point in time. But again, I think that's less likely. DXY. So yeah, we had our last video, we had gotten this move up here and had basically broken through that key level right here. You can obviously see, that we have jumped up substantially since then. This is 3 massive green candles in a row. While I do expect us to run into some resistance here at our 236, and if we zoom out to the big picture, that was from our top back here in March of 2020, that reaction rally off of the scare, and then we came down here and put in our low in January of 2021. That was our channel that we broke out of. From when we broke out of that channel, we have not taken out that low. we still have a higher low right here, and now we're coming back up to areas that are key. So we're at the 236, which is where we would expect resistance. Our next key resistance would be the 382 up at 94. Again, there is not a direct correlation between the DXY and necessarily like assets or bond yields or anything like that. This is literally the dollar strength compared to a basket of currencies. So while we may see some correlation between them, this does not mean if the dollar goes parabolic, markets do not have to sell off. It's in relation to other countries' currencies, primarily like the euro, the pound, etc. So, but I do expect further move to the upside. But after a move like that, it's not unrealistic to think that we would get some kind of resistance here, sell back off, find support at a higher level. But we looked at this on a longer time frame and saw a bunch of bullish divergence. I know people are talking about, this was an unexpected move. There's no way anyone could have expected this. It was a reaction rally, etc. I mean, we talked about this ahead of time before it happened. Every time we've come down to the bearish control zone, every time we've gotten the hard buy signal, we have gotten a strong move afterwards, regardless of the overall predominant downtrend. Every time we have gotten this green signal in the bearish control zone, followed by the hard buy in blue, we have gotten a follow through. So now here we are with that same green signal down here. We have put in our first weekly histogram, monthly histogram is showing up here, and we are looking very likely like we are about to get this cross to the upside. There's still a little ways to go before we exit the bearish control zone. We are sitting down currently at like the 15 level. The bearish control zone is at 20. So at that point in time, we would get the cross to the upside. But we do have the knife now starting. It's flipped over green now and it's angled to the upside. So it looks like we are going to get continuation. If we do look at our moving averages, again, this is what we were speaking about as well. We came down to the 200 exponential. We bounced to the 200 simple as well. We now came down to the 200 exponential, but did not get down to the 200 simple. We have a flat slope on these. So coming from a negative slope on the simple and a positive slope on the exponential, there's a high likelihood now that we could go in either direction. But more than likely, based on the levels we're at, based on the signatures we're seeing, based on this long consolidation period where we basically just went sideways for years while the indicator oscillators reset, I think the probability is very likely that we would go to the upside. Also, I think people are like fundamentally thinking that the dollar is going to collapse, because all currencies are going to collapse and everything's going to go to zero, and Bitcoin's going to take over, or gold and silver is going to take over, or we're going to go back to the barter system and currency's all going to disappear. Look, that's a long process. There has to be something else already in place. You can't just like have the dollar collapse and go to zero and the next day start showing up at the grocery store with silver coins to pay, or like Bitcoin to pay. Like, it's just not realistic. These things take long amounts of time. It takes time to put these structures into place. The powers that be will take whatever means necessary to prolong this shift as long as they can, and there will be something else in place before it happens. World reserve currencies do not just go away overnight. If you don't believe me, go back and look at what happened with Britain, England, whatever you want to call it, and the British pound, and how long it took for that whole process to take. And that was our last world reserve currency. And then after that, we had basically like the dollar was the world reserve currency. And even when the gold standard collapsed, we then went on to like quote unquote the oil standard. So it's not just going to go away overnight. Also, if we look at our weekly chart here, we now have, after we got a bunch of different divergence that we've been pointing out, bullish divergence, it was very likely we were going to get a strong move to the upside. We got basically multiple signatures in a row, which are extremely reliable. They play out over and over again. We now have the histogram above the slope line on the TJD TDMACD. We have blue on the slope line as well, and we have left the bearish control zone. We are angled powerfully to the upside. We have the knife on the way to the upside, and we got a parabolic move after that. We now have crossed the 821 to the upside as well. We are back on top of the 528, basically busting in to the 55 and the 50. 377 is still above our head at that 93. That's going to be a very powerful level as well, but that is going to form a double bottom W pattern right here. So we basically have a single V and the neckline right here, and then another V forming with the neckline. And when we break through that at the 93 level, we would basically expect a move equal to the 89 to 93 level, so another 4 to the upside. So if we break through 93, we would expect to move up to 97. Now, could we come up here and put in a lower high and then sell back off? We 100% could. Are we going to run into resistance at like the 89 and the 200s along the way? We 100% are. But we have very, very few times in the past, this is on the weekly scale, come down here, gotten the flip of the slope line at these levels, like below the 0 line, and then gotten a false signal. Every time we have gotten at least some follow through. This was the weakest signal that we ever got right here. But we did get basically a dump after that. So while it is possible that we have a situation like that arise, I think it's very, very unlikely. And, statistically speaking, everything is pointing to the upside right now on the dollar, in my opinion. So, but yeah, that's our DXY. I do expect us to come back down here 100% and retest like the 200 exponential and potentially 200 simple. But at this point in time, we have been in a confirmed downtrend on the daily since May of 2020. And now we are above there. We did get above it slightly right here, but we did not ever get these slope lines angled back to the upside. So what we're paying attention to on the daily, which will lead into a weekly, which will lead into the monthly, obviously, is we're now inside the bullish control zone. We now have the 200 exponential moving average with a flat slope, and we're very close to rolling back over the slope on the 200 simple to flat, and then we can potentially call this a legitimate uptrend. Here, we were above the 200 exponential and got it flat, but never actually to the upside. But the 200 simple was still angled very strongly to the downside through this area. Now we are losing that slope right here, and it's almost flat. So if we can stay up here for basically any amount of time, like days or weeks, this will start to roll back to the upside, at which point in time, it will be very clear that we are in an uptrend. And that's going to be right around the same time. Obviously, we get the break of the W neckline right here, and then we would expect to get that measure move. And it will happen violent, it will happen fast, and it will probably correspond just the same way we were talking about. This will probably have a correlation, even though it's not direct, even though it's not 100%, it will have a correlation with overall other markets. So as the dollar strengthens, people are fleeing to the dollar probably because markets are selling off, or markets are selling off probably because people are fleeing to like the currency. So it's important to understand the difference between causation and correlation, because oftentimes people will say, the last 2 times I got pulled over by a police officer, it was a sunny day. Therefore, when it's sunny, I get pulled over by police officers. Well, no, probably not. Probably not. One does not have to cause the other. There's just a correlation between the two. As where if you say the last 2 times I got in a car accident, it was raining out, it probably means that you have bald tires or you suck at driving in the rain. And maybe those 2 things are related. But you have to look at the difference between causation and correlation. Are they just correlated because they just happen at the same time, or did one actually cause the other? So that's what we're paying attention to. Obviously now, looking at our S&P, like I said, I'm not going to sit here and try to call the top on this thing every 2 seconds, but every time we get up into the bullish control zone, every time we get the hard sell signal, every time we get bearish divergence, multiple stabs of bearish divergence between these points, we tend to get a sell-off. There's a reason. Obviously, we got a pretty violent sell-off. We are now basically back down, potentially retesting that support here. Again, we broke out, retested support, put in a new high, bearish divergence on both of our indicator oscillators, and now here we are right back down looking to test it again. The last time when we tested it, we tested the 50-55. This time we have broken down from the 50. We are at the 55. I do expect us to retest this breakout point, which now, because the moving averages keep moving as we go, we're going to be testing the 89. We tested the 89 back here. We tested the 89 back here. If we break down from the 89, I expect us to test the 200. If we break down inside of more of a macro view here, if we break down inside of this massive pattern that we have, I would expect basically this is an attempted breakout that fails, just like we talked about back here. It looked like a breakout over and over again, and then finally failed. We came all the way back down to the bottom of the channel. If we do that again now, and we come all the way back down, and this is like a pretty bearish looking candle on the monthly right now. Like, if it starts coming down here and takes out half of this candle right here, it's going to look extremely bearish if it gets down to like 406. If we come down and retest the bottom of the range, assuming it takes a couple of months to get there, depending how violent the sell-off is, we're talking about like a $325 range. So I do not think that it's unrealistic to think that we're coming down to that 325 range if this does not hold. So, and also, we are up here inside of the bullish control zone. The last 3 times, bullish control zone, hard sell, we got a violent dump. We can look at it, basically from either the high right here, or we can look from the high right here. That was a 20% sell-off back down to the bottom of the channel. This was our, the Rona sell-off right here. This one from, peak to trough, like wick to wick, 35.9% sell-off from the top to the bottom right here, and corresponded with our heart sell signal coming out of the bullish control zone. And now once again, and we talked about this as well, we're on the monthly at an unsustainable level. The monthly is at a 96.52. The last time we were up there, we got up to 97.6 and we had that violent sell-off. This time we got up to 94.2, had that violent sell-off, and now here it looks like we're getting ready to do the same thing again. We cannot stay at like 95 levels because there's no more money to come into the market. There's no more buyers to come into the market. So again, if we have that same or similar style sell-off from top to bottom, I would expect somewhere around like a 20 to 25% sell-off. Now, is that a market crash? I mean, not technically, but anything over 20% is considered a bear market. I do think that we're going to see regular crazy volatility in these markets way before we ever just see like a sudden crash. I think we will see hard sells, hard buys, like all kinds of crazy stuff happening. We're not just going to see this thing dump down 80% overnight. We're not just going to go to zero. An asteroid is not just going to hit the earth tomorrow. Like everybody is always so like convinced that they're right, or convinced that they're, the markets are going to the moon or the markets are going down. I just tell you what the market's telling me, guys. We've got the divergence signal on the weekly, hard sell, hard buy, hard sell at the top of the range. I expect this to dump. We have, divergence on the monthly. We have the divergence signal on the weekly. We're at, once again, unsustainable levels here. We were talking about it ahead of time. We were up at 97.6. The last time we were at 97.6 was right back here. The time before that was 97.5. There's no more room to the upside. It's literally damn near impossible. And then again here on the daily, hard sell signal, divergence. It is what it is. Dow Jones is next. On the daily, it looks, this was showing weakness again. Once again, bearish divergence, 3 drives of bearish divergence. And now here we are selling off. This was a high right here. This was a higher high. This was the same high. Those are 2 different forms of bearish divergence, but both very clearly bearish divergence. Usually when we get the 3rd drive of bearish divergence, we got the 821 crossing to the downside. And then here we are dumping. We told you that if we broke outside of this channel, I expected the dump to be the measure move. The measure move is just the distance from the top of the channel to the bottom of the channel, or vice versa. We're back down here now at this point in time, retesting a key level. We're just above it, obviously, but we're at the 89. The next move to the downside is this support right here, or the measure move right there. And then after that, it's a 200 exponential and simple, which is going to take us down to the purple support line here. So now, again, I'm going to go ahead and let's turn off the moving averages. And then let's go back here and look at our longer time frames. So I'm going to switch to the weekly real quick. We have talked about basically this pattern here inside the weekly, this giant megaphone pattern. If we come down back inside of the megaphone, which is that red resistance, the next resistance or support in this case will be the purple. And then we'll look at that in a second. And then after that, we're potentially talking about coming down here to like 20,000. If we come down from 34,000 to 20,000, that is a ridiculous sell-off. But based on what's happened every other time, retesting this is 41%. If we retest the bottom of the megaphone, that's over 50%. So we need to be careful here. There's very little move possible to the upside at this point in time. The best thing for bullish people in these markets right now is a long consolidation at the top of the range and then a breakout. But the last couple times we went from the top to the bottom, top to the bottom, top to the bottom. So at this point in time, we are out the top right here. I would expect to move potentially as low as the bottom of that channel. Now, if we zoom way out on our 100-year chart, which I've noticed now, everybody's using a 100-year chart. That's great. I'm glad that people have started using it. That's fucking awesome. Even if we look back at 1982, that's our like basically 40-year cycle from the bottom of the range here in blue. And then the green is our support. We hit it once here. We hit it once here. That's 3 touches on the bottom. From that 3 touches on the bottom, that takes us down basically to that green support, which is the 21,000. And then if we zoom out on like and again on the weekly, we're looking extremely weak on these indicator oscillators. If we zoom way out to the monthly, and I gotta like honestly point this out because I thought this was hilarious. I've been using this chart for months. Anybody that watches the channel knows that. I literally saw Jay Bravo the other day, and he has this drawn in exactly the same. He has it drawn in exactly this channel right here, skipping the top right here and the bottom right there, and then drawn in like that. So I think it's great that he watches my channel and steals all my stuff. I think it's absolutely hilarious. Maybe just give your boy a shout out. Stop just talking so fast and saying things so fast that even you don't understand them. Whatever. But regardless, so we have this over 100-year channel that's been taking place here. We are now at the absolute top of the channel. If we come down to the bottom of the channel, this is where these crazy dudes come up with like that 80+% crash. If that takes us back down to the bottom of the blue right here, that's an 80% sell off, and it takes the Dow back down to like 6,600, which, is it unrealistic to think that's possible? I mean, it's not likely to happen, but it's definitely possible. We've gotten crazy crashes like that before. Like for instance, this one right here. Well, it just so happens this is like our 100-year cycle right here, and the 100-year cycle crash was 89% in the Dow Jones. That was literally the sell-off coming out of the roaring 20s into the dirty 30s, aka the Great Depression. So, are we in a 100-year cycle getting ready to have that crash back to the bottom of the channel? I mean, I wouldn't be surprised, but I'm not going to sit here and say that the Dow Jones is going to sell off 90%. But if it did sell off 90%, what's the chances that the Dow gold ratio would come into line? Well, I think if the Dow lost basically like $27,000 in value, I think that probably gold would go up by like 3x. So I think it is realistic that at the bottom here, historically speaking, compared to like what happened 100 years ago, that yes, the Dow could crash down 90% or 80% or whatever. Gold could go up, 3x, and we end up with basically $6,000, $7,000 gold per ounce and $6,000, $7,000 Dow per Dow Jones Industrial Average Index coin per Dow crypto. But yeah, I mean, this is, again, that's based off of one previous time it happened in the past. The likelihood of it happening is unlikely. For the last 100 years, everybody that was calling for an 80% crash in the stock market has been wrong. But, hey, does it mean it can't happen again? No. Has it happened before? Yes. Is it likely to happen? No. Do I think it's going to happen? Yeah, maybe. Honestly, maybe. Again, unsustainable levels here. On the monthly, we are up at unsustainable level, over 96 on the monthly Dow. I mean, there's no more room to the upside. We have broken out, look, it is what it is. We can turn on moving averages. I can show you all these different things. But the fact of the matter is, all these indexes have been giving us signs for a while that they were overbought. Everybody and their mom is all of a sudden an amazing trader. Everyone has, a TikTok about how they turned their $1,400 stimmy check into, $1 million. Well, here's the truth. If you were getting a $1,400 stimmy check, you probably didn't know how to trade before, or else you would be ineligible for a $1,400 stimmy check. I have nothing against people that got stimulus checks. I have nothing against people that are on, welfare programs or food stamps or anything like that. By all means, I think that we should have a minimum living. I'm not against taxing billionaires and making them pay their fair share. I'm literally just saying that if somebody really knew what they were doing, they probably would already have been a trader, would probably have already created a TikTok or YouTube channel or whatever, not just like after the markets have only gone up parabolically for like the last year. So, careful who you listen to. Careful who learned how to do technical analysis in the last year. Careful of people that hodled from $17,000 and just learned, or $20,000 in 2017 and just learned about crypto, and now are telling everybody else how to do stuff. So shout out to you, Crypto Zombie. So here we have the IXIC, the NASDAQ. Of course, we came back up to our resistance one more time. We got that, basically third drive of resistance, divergence, etc. Here we have a top. Here we have a top. Here we have a lower top. Here we have a higher top. Here we have a third lower top. And, this corresponds with basically slightly lower, but essentially the same high. But the point is that this is unsustainable. Afterwards, we would expect basically a violent sell-off back to the bottom of the range. And while this is a bullish triangle pattern, I would expect us to at least come back down and retest the bottom of the pattern. And the likelihood is that we will break it around this time, roughly. We typically would break out of a triangle within 66 to 75% of the pattern. Typically is around where you break out, which is pretty much where we're at. By the time we come back down for a retest, or if we hang out here. Could this break to the upside? It 100% could. Could it break to the downside? It 100% could. The probability is 66% to the upside, 34% to the downside. But, considering that we're about to, or getting the hard sell signal, leaving the bullish control zone, and we've seen a bunch of divergence here, I would say we're probably going to break down at least to retest the bottom of the channel. What happens after that, we'll have to play it by ear. But I realistically, there's a reason I've been saying these markets look like shit. It's because the markets look like shit. And we're more than likely going to be selling off again. So we'll see what happens, though. You know what I mean? Anything can literally change in a couple of days. But the old Ruddy. I've been telling you guys that the Russell is a piece of shit, and half the companies inside of it are basically like zombie corporations. They make no money. They have no profits, and they are literally only sustained, only alive right now because of zero interest rates. So God forbid that interest rates go back above like 0.5% on the federal funds rate. If the 10-year starts going parabolic or anything, I would expect these things to absolutely collapse and bankruptcies galore. But in the crazy world we live in, 1 minute like Hertz, you can be bankrupt, and the next minute you can be raising money at ridiculous valuations, and your stock is at new all-time highs, and nothing has changed. So, same with GameStop. Same with the old AMC apes, etc., Dogecoin, all that stuff. It's all trash. It's just speculative. People have too much money and are just throwing it everywhere. So, but we got a bunch of hard sell signals. Every time we get the hard sell signal, a bunch of red histograms in a row, we fall out of a pattern. We get the measure move to the downside. What's going to happen after that? We'll have to wait and see. As far as I'm concerned, we are in a channel. Top of the channel is $2,362. Bottom of the channel is $2,133. If we break out, or you could go down here, either way you want to look at it. If we break out the bottom of the channel, the measure move being, the top of the channel to the bottom of the channel, basically going to take us down potentially to our 236 support back here, or slightly lower, but about $1,860. And once again, if we look at the Ruddy, looks like absolute trash. We are at unsustainable levels. There is no reason for these to be up here. This was our high previously, back in January of 2020 or August of 2018. We actually put in a lower high here and then got that capitulation dump. So do you think that the companies inside the Russell 2000 are doing better? Do you think these 2,000 companies that form this index are doing better as a whole right now? Are they having higher sales? Are they having higher profitability? Are they making more money than they were before by, let's check the percentage. Are they roughly 35+% better than they were going into the pandemic? Or do you think they're probably worse off now and that this is just a bullshit bubble? I would say probably a bullshit bubble. This thing has rallied from the bottom to the top over 137%. Look, there's some companies for sure that are doing better than they were going into this. But do you think that the Russell 2000 like publicly traded companies that are a bunch of just different random zombie companies are all of a sudden doing so much better? No, this is all just bailout money. This is all just, speculative money pumped into the markets. So is it unrealistic to think that we come back down to like 1,700 and retest like our breakout level and try to find some kind of support back down in here? I think it's very high likelihood that we do in fact see a 20+% sell-off in these markets. Again, looking very bearish on the monthly, but we'll have to wait and see. We can look at moving averages, all that junk, but it's all the same. Moving averages 2,100, 21 is 1,860, and then again, if we get back down here, by the time we get there, the parabolic SAR will have been up here at like 1,700, along with like the 50 and 55 moving averages. I think that's where we're headed. It's just a matter of when it happens, guys. But let's be real here. If you haven't been taking profits along the way, you deserve to just give back all your gains. But obviously, it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly, and these videos are for entertainment purposes only. If you listen to what I say, you will in fact lose all your money, and you will be living in a van down by the river. And if anybody got that reference, please post up in the chat, because that's one of my favorite skits of all time. ICLN, again, I was very skeptical of this move. We're still above our two previous resistances, but I'm not convinced on this one. I think we're basically just going sideways here. Potentially going to get a heavy sell-off. It's hard for me to put money in any of this stuff right now, honestly. The XLE, we were talking about this, the energy sector. Everyone was so bullish on the energy sector. I said it was probably about to die, and just had a violent sell-off back down here. Did not quite hit our next target, our next resistance, but big red candles like this and gaps down, and then immediately closing the gap, and then again getting a big red candle to the downside, hard sell signal, multiple red histograms. Those are not good things. Those are not good things. So it's not like we didn't see this coming. The industrial sector, everybody was talking about how bullish it is. I told you this was overcrowded, and now here we are. Industrial sector has gotten 821 cross to the downside. We are now testing the 89 moving average. This happened literally right after we said it was going to happen, literally days later. It's extreme weakness. It's a bunch of bearish divergence. It's a bunch of very clear signals. Do we find some support here and move back to the upside? Yeah, maybe. I mean, you can't, things don't just go straight down or straight up. But it's all, we saw all this coming. Let's talk about the financial sector. Everyone was talking about how banks are going to do extremely well. I give you a bunch of technical and fundamental reasons why banks will not do well, especially if Fed coin comes out. And now here we are, parabolic moves to the downside, violent sell-offs, retesting the 89 moving average. Next target to the downside, $32. Look, I mean, I can't just keep saying the same thing. What do you want me to say? Told you so? Okay, I told you so, guys. But you're the ones who listen. It's all the other idiots that don't know about all this. So you guys are the smart ones, because you tune in and pay attention. So XLU is next here. XLU utilities, same thing here. I told you I was skeptical of this move. We started to get a nice move up here. I told you after a violent red candle like that, we're probably going to see continuation to the downside. We saw a rejection. We saw violent follow through. We're back inside the channel now. The knife is all the way at the bottom of the range. Is it possible we keep going to the downside? Sure it is. Is it possible that this thing just violently sells off and utilities go to zero? No, I do not think that you will get free utilities, nor will I. But in all reality, again, not unexpected in any way, shape, or form. U.S. oil, still staying pretty strong. I would expect this to continue staying strong, as everything is based on oil. But we are at the top of the range. We did get the hard sell signal. Multiple red histograms in a row. We're trying to come back up here. I imagine this is probably going to sell off at some point in time. But, as long as they're constricting supply on this, I would expect it to keep going up here, because all they can do is just keep tightening supply, and the price just keeps going up on oil. Keep in mind, too, a barrel of oil is still only $72. The previous all-time high on a barrel of oil was like $140 something. So it's still 50% of its all-time high. So it's not overvalued in the same way that like pretty much everything else is. So I'm going to jump over and chat real quick, and then we will do, let's jump over and we'll do tech next. Technical. All right, Bubblies, what's going on, brother? Good to see you. K Ols 93. Yes, right. Let's go. Our kits in the house. Hello, everyone. Happy Father's Day. That's right. Happy Father's Day to all the fathers out there. But only the actual fathers. On Mother's Day, happy Mother's Day to mothers, women that have children or take care of other people's children. Fathers being, men that take care of children or other people's children. But I honestly, as controversial as it is, in order for, in my book, based on like the dictionary, a father, you could be a father figure, I guess, and not be a man, but I think you have to be a man to be a father. I think you have to be a woman to be a mother. I don't believe in birthing parents and stuff like that. But again, I'm conservative in my trading and in my views, and I have the right to that. Does not mean that I don't like people that have different views than me. I just go by like actual dictionaries and like science and stuff like that. So happy Father's Day to all the men out there. Happy Mother's Day, on Mother's Day to all the women out there. You cannot be both a mother and father. I don't believe in that either. So here's your controversial stream of the week. Wanted to check in and boost the algo. Appreciate you, brother. Ty Smith says, go, go. Yes, what's up, Ty? Good to see you, brother. KO's 93 is this a random of being compromised like that? Yeah, super random, dude. Definitely sucks. It was not a big deal. I caught them both in time. Did not have an issue. They were both extremely low dollar amounts too. Which I think that's what they're doing is they're trying to like nibble at people to see what they can get away with before they try anything big. Or maybe they just do a bunch of small transactions and assume you're not going to see it. Gonna check my Amazon. I don't think I had a Walmart account. Yeah. Yeah, Matt Foley. Yeah, that's awesome, Ty. I'm glad you got that, brother. Definitely miss Chris Farley. He was back in the day one of the best comedians of all time. His motivational speaker like videos were absolutely fucking amazing. So, okay, so Tesla is still looking weak, technically breaking out of our little pattern to the upside. We got the sell buy. I imagine we're probably going to get the sell signal soon. It is definitely possible we still get this trade to the upside. But again, I'm extremely, extremely skeptical of how this looks. Interest rates are going to have a direct bearing on tech. If interest rates go up, tech will go down because it's the most overvalued. I literally heard people saying the other day that as long as interest rates continue to rise, that tech should be strong as well. Literally makes no sense. I think people are like honestly confused about, no, it's not even I think. People are legitimately confused about markets, about technicals, about fundamentals. People are just confused about life. It's very sad. But we are in crazy times. Just like the markets, I think society has its ups and downs. It has its big breaths in and its big breaths out. And I think we are just at the absolute peak of ridiculousness right now. I would expect us to go from like, I mean, in the United States especially, I think we are like extremely progressive right now and people have lost their fucking minds. And then I think we will probably overshoot it to the downside towards conservative, like conservatism. Yeah, that sounds right. And then people will be overly conservative in the future. I think that probably we're better off somewhere in between. But, I don't think we can stay at these ridiculous levels for much longer. I don't think the world will exist if we get any more politically correct. And there will be no more comedy. And there will be no more social media because everyone will be banned. Yeah, it's ridiculous. No more internet. Pinterest still showing strength. I would expect us to come up here off that trade. Still up to the 80. We did lose the red slope line right here. But, overall looks good. Bullish control zone. This trade still looks good. Everything pointed to the upside. Pinterest is one of the strongest. eBay did exactly what I was talking about. Ladies and gentlemen, once again, say it ain't so. I told you I was extremely skeptical. I told you I do not like breakout trades to the upside. I wanted to see, at best, a breakout and then confirmation, consolidation, and then I would potentially buy into continuation. But I did not like this. And what did I say? It looks like a throwover. And what does it really look like now? It looks like a throwover. What is a throwover? It's when you literally walk out to the edge of the cliff, you take the ball at the very top, at the resistance, and instead of just falling down, instead of just rolling off the cliff, you throw it up as high as you can and then use that momentum to slam it down violently to the downside. Again, bullish pattern at resistance, but here we are, selling off, breaking down back inside of the zone. I would expect us to come back down to the bottom of the level, corresponding with our moving averages. Again, I expect eBay to sell off here. I expect, honestly, I think there's a lot of rebalancing going on right now. We're at a key level in markets. Not everything, a lot of stuff is at all-time highs. People are talking about how great the retail numbers are, the home builder numbers, this, that, and the other. None of it is sustainable, in my opinion. None of it is sustainable. I think we saw a burst in like retail. We saw a burst in service industry. We saw a burst in all this stuff. It was all pent up demand. And the fact of the matter is pent up demand is not sustainable. People are not just going to all of a sudden go back to eating out like 3 meals a day and, driving to and from work and sitting in traffic and all this stuff. Things have changed. There have permanent changes have taken place. Supply chain disruptions are still in place. So we're still going to see like inflation. We're still going to see long-term deflation, but overall I think we're going to see stagflation, which is like inflation but at a lower rate, or potentially an overall deflationary environment, or like some things inflating while other things deflate. I think it's very there's also so many different kinds of inflation. You know, people say we're going to see inflation. Well, break it down. Tell me what we're going to see. Because the only actual inflation, like that really matters, like currency supply inflation, doesn't matter because most currency is digital. So if we have literally like 1 million units of currency in circulation and then they print another 250,000, yes, we have 25% more currency units in circulation, but that doesn't matter. That's all just part of M1. M1 is not what makes for like actual markets and everything. You forgot about M2. You forgot about the old M3. And the only real inflation that sticks is not what it's not currency inflation. Real inflation, when people are talking about inflation and prices going up and everything going up and costing more and the dollars being worth less, that is actually only way that actually sticks is if we see wage inflation. So that's why, like, I'm not against $15 an hour minimum wage or anything, but until something like that happens, if you pass a $15 an hour minimum wage inflation that's effective over the next 10 years, you know, and we go up 50 cents per year for 10 years, I do not think we're going to see sticky actual inflation in the way that people are arguing we will. But again, most economists are wrong about everything. Most other people don't even take the time to understand or learn about anything. So the likelihood of whoever you're listening to that's calling for these things, they probably just don't fucking know what they're talking about. So hard sell signal on eBay, selling off, obviously. Expect it to go lower. PayPal still looks decent, still strong, still putting in a lower high. We are breaking through that key level, though. I would expect at this point in time continuation. We basically tagged the 786. If we get above the 886, I would expect us to retest the top of the level. We are very close to printing our divergence signal. So I would expect, honestly, a sell-buy-sell signal to print here and then a violent sell-off. We are also retesting what was support that acts now as resistance, which, again, I would expect continuation to the downside. I still think most of these things are going to continue selling off. We tagged the 236 on the macro Fibonacci. Like, you know, by macro, I mean way back here to like the $82 range from the March crash. Since then, we have went absolute parabolic on PayPal. A lot of this has to do with the crypto rise. A lot of this has to do with like online payments and stuff like that. You know, where PayPal was being used as where previously you would just buy things in a store in real life. PayPal has gone on a parabolic run. It hit the 236, confirming that the top is most likely in, and we can start Fibonacciing from then. We now have a bullish retracement of the bearish dump right here. I would expect us to sell off here, and then our next target to the downside, the 382, eventually in line with the 526, $183. If we break down below $227 though, I think it's very likely we hit like the 140 and potentially as low as the 618. Again, I mean, look, you guys know how I feel about all this stuff. Bumble still looks good. We got the 821 cross. We're banging our head on the 50-55. You know, everything is bullish on the indicator oscillators. We're in an uptrend after the downtrend. Again, this is still a internal retracement. So from the high back here to the low back here, I would expect any moves that take place to take place inside of this range here. How high do we get back up? I still have my target at $57, at which point in time I will probably get out of this. I'm already very skeptical that this has much more upside potential, but I think we could get there. We'll see though. Baidu, again, still looks weak. I mean, it's showing a little more strength, but you know, I told you guys how I feel about this. I don't love how these like China stocks are looking, but I do think diversification is key, and we are at very key levels on longer time frames. If you care to see those levels, look at an old video, because I've talked about 100 times. Same with Alibaba, same thing here. You know, potential move to the upside on Alibaba. I like this level. I like the buy out of this area. We're basically at my entry still. You know, if we start breaking down violently, I might reassess, but you know, we have quite a bit of bullish divergence taking place here. You know, so we'll see what happens. And when I say bullish divergence, I mean we have like a low right here, a low right here, a low right here, and then now we have a lower low right here, but we have a higher low on the indicator oscillator, a higher low on the indicator oscillator, and then potentially, you know, we'll see what happens with this one. Maybe we stab down again, we get a third drive, maybe we just go parabolic, maybe it just cuts sideways for a couple months. I don't know. But overall, still like this. I like the diverse creation. Neo, obviously the strongest. You guys know I slightly missed my entry on this one. It's unfortunate. We're probably about to top out though. We're almost at the move that I was expecting, 69% move to the upside. It's crazy. I missed this by like 1%, and it's gone up 69% since then. But, you know, hey, I don't chase it. But we are getting the hard sell signal. we are at the top of the range. So we'll probably get that last little push up here. Maybe we even get a little higher up to like 53 bucks, but I don't know. Probably topping out here pretty soon. Peloton, it's already overperformed after the dump. It basically like sold off a little bit, broke down from key support, and then came back up. But we still are looking at a high, a low, a lower high. We could get rid of this head and shoulders at this point in time. We don't need to see that. But basically, we have a high, we have a low, we have a lower high. Until this thing gets above $124, it still looks like crap. If it does get above 124, there's key resistance at 139, at which point in time, new all-time highs. I don't think it's going to get there. Maybe if lockdowns happen again and all of a sudden they start delivering Pelotons left and right, maybe we do. Apple is next. Apple's still looking overall decent, but not great. Again, we have a high, we have a lower high, we have a third lower high here. Really need to get up here and take out that 136 level. But again, we're at resistance. We're at the 618 key Fibonacci level for that internal retracement. We're at like the bullish control zone, but potentially looking like we're topping out. We did just cross over a bunch of histograms in a row, blue slope line. There's definitely potential that we do get the breakout. If we do get the breakout, what are we looking at? Well, we're probably looking at some sort of, I would say, like a flag pattern here. We now have like basically like some kind of support through this range right here. So if we were going to do the measure move of the flag, you could take either the flag pole, which is like a little reckless in my opinion, but I would take like the meat of the pattern itself from the bottom to the top. So assuming this was the breakout, which I do not think it will be, but there is a possibility, I would expect Apple to move up here to the 1.236, as high as $153. So, but we'll have to see. I mean, tech has been going sideways for so long. I think that a lot of this stuff, people are just moving back into it because everything else has bursted up and they're just rebalancing. We're going to see a lot more rebalancing over the next like week or so. This is the half. This is a big deal. A lot of people are taking like capital gains from like the 1 year mark and locking those in for the discount rate. So, things that people have been in for a year, they're probably going to be moving out of at this point in time. And I think probably a lot of people are going to be keeping a lot of capital on the sidelines as, a lot of the stuff's looking tired, looking real tired, had some nice moves. You'd have to be crazy not to be locking in profits or have locked in profits. So, all right, let me jump back over and see what's going on over here. Tom Jones says, society has a mental illness funded by the media. Yeah, 100%, man. And who funds the media? Yep, like a couple of like multi-million, 100 million / billionaires. They are basically just turning people against each other any way they can, trying to make men and women hate each other. They have created like unsustainable patterns in society, just like basically destroyed the family structure. Now we have like men angry at women, women angry at men, people fighting for rights. The truth is people have more rights than they've ever had before. And I'm not going to get started on this whole like slavery ordeal and everything. My big argument is I'm glad there's no slavery in the United States. It's absolutely great. 155 years or whatever, slavery free. That's awesome. But like this whole Juneteenth thing, like if you want to fight against slavery, fight against the people that are still slaves. I'm with you on that. If you want to rally the troops, if you want to raise money against slavery, let's free the people that are still slaves. There are still literally slaves in the world right now. So, I mean, it sucks if your ancestors were slaves 155 years ago. That definitely sucks, and it never should have happened, and it's very unfortunate. But slavery goes back to, like, literally the beginning of time and the beginning of, like, human beings. And I think that probably if you're angry about slavery, you should be angry about the people who are still slaves. Like, it sucks that there are literally people watching videos of slavery on their iPhones that were made by slaves. Like, come on, guys. Like, can we at least fight the good battle against, like, what really matters? It blows my freaking mind. But, it's like you said, people have mental illnesses. It's absolutely pathetic. And hopefully we're just at the top of a cycle and then things will go back to normal. Lazy boy. I don't know what's going on there. Is that your new nickname? Law Lazy Boy? I don't know. That's funny. But what's up, Lazy Boy? He says, it's the perfect move. Have a throwover in the same move as a breakout. Yeah, it's the best way to trap people because all the people that were short, stop losses get hit and they have to rebuy at the top. And then all the people that were long try to add in or buy the breakout And then what ends up actually happening, the breakout fails. So then all the shorts re-enter the short. So they had to buy back in to close their short position because of their stop loss. It pushes the price up. People FOMO into the breakout and buy in, and it pushes the price up even more. And then all of a sudden that tops out, and basically like the shorts buy back in, or resell, I should say. And then the actual longs that bought the breakout stop loss get hit when they break back below their entry level. So basically it creates that momentum back to the downside, as where if you just walk out to the edge of the cliff and roll the ball off of it, it's going to start at zero momentum and then go downwards. If you throw the ball up in the air as high as you can, once it reaches that like top area and runs out of velocity to the upside, it hits that neutral, and then it starts from a higher level. So by the time it gets back to the same level where you threw the ball up from, it already has a bunch of momentum built up to the downside now. Therefore, it can break through like key support levels that it wouldn't have been able to otherwise break through in many cases. And that's like the mentality of the throwover. So, but yeah, it happens all the time. It's the absolute best way to get people to buy the top or sell the bottom. You know, it sucks. It is what it is, but like it's basically a failed breakout. But often it's the market movers like pushing price in that direction to like whatever you want to call it. I don't like the term manipulation because people use the term manipulation when the market does what they don't want to do, and then when it does what they do want to do, they just say it's bullish, we're going to the moon. And I'm like, it's not manipulation when Bitcoin goes up to $65,000, but if Bitcoin sells down to $30,000, it's manipulation. I don't know. It makes no sense to me. Same with gold people. The gold and silver people are like obsessed with the idea of manipulation, but anyone in the entire world knows that, you know, it is what it is. You can either like it or not. Just because the people that have more power or more money than you don't agree with the direction of an asset does not mean it's manipulation. The fact of the matter is that it is nearly impossible to manipulate a market long term in the direction other than the direction it should be going in. So you can hold down prices for a while, depending on the asset, depending if it's gold, depending if it's Bitcoin. You can hold the price up, whatever. But eventually, the markets win, you know, and the price goes in that direction. So here we are with gold selling off violently. You know, as I predicted, I know the whole rest of the world said gold was going to $100 trillion, and they were all excited. But what did we do? We just put in a lower high. Once again, we broke down from our key support, which was our previous support from before. We are now putting in potentially, look, you could call this an inverted head and shoulders. So we have basically a left shoulder, a neckline, and then we have a head, and then we have a neckline again here, and then we're putting in a right shoulder now. Is it possible that that's what we're doing? Yes, it 100% is. It's definitely a bottoming pattern. It can happen after a parabolic move to the upside and then a long sell-off like this. So it is very possible we could put in a higher low right here and then go back to the upside. But with the way premiums are set up right now, think of all the people that bought into gold at $1,900 with $200 premiums. So they're in it for $2,100, and now here we are back at $1,800. So you have already lost like basically 20% of your value. Yeah, expected. The indicators absolutely destroyed this move right here. We obviously got the hard sell at the absolute top of the range here. You know, I was expecting us to get up to 1950. We got up to 1920, so I was $30 off. I mean, I'm not perfect, guys. We did get, obviously, the slope line, multiple red histograms in a row. After 2 red histograms, we would have very clearly gotten the top. We were inside of the bullish control zone. We got the hard sell signal. I mean, look, it worked perfect. Everything worked perfect. Gold topped out. Do I want gold to go to $10,000? Yes, I own gold. I love gold. Gold is awesome. It's pretty. It feels good. Yay, gold. But, I mean, be patient. Just buy more when you have a chance instead of being worried about it not all of a sudden breaking out of like 30-year patterns. All right, so here we got silver. Once again, bullish pattern. You know, obviously breaks to the upside more often than not. We were very clearly around that 66 to 75% mark where we would typically expect a breakout to take place. But here we have sold back off from that same level again. We were probably going to be retesting the 200 exponential or simple, which we are currently, also the bottom of the range. Is it possible we break down from this range? Yes, it 100% is. Is it likely? It's less likely that we break to the downside than to the upside. But again, we had a bunch of things telling us that this breakout to the upside was going to fail. We had a bunch of things like the gold silver ratio telling us more likely than not that we were not going to be breaking out to the upside, or that gold was going to be breaking out more to the upside and silver was going to underperform. If we do break down here, I would expect this to come down to that $17 range. I don't think it's realistic. I think we'll find a bunch of support at like 21 bucks, but it's definitely possible. I mean, there is strong support at this level, and it's also the 786 of that move from our like all-time high. You can go see my actual views on where silver's going. I definitely think there's targets to the upside long term, like 30 to 50 year targets of, patterns basically, up to like $50, $90, $120, even $500. But again, we don't want silver to go to $500 because if it does, it means like the world has collapsed. Some of the other targets are much more attainable and more likely, but silver is putting in, let's take a look at it really quick, and then I'm actually going to take a break. Silver is at this is literally, and I see this chart all over the place again too, and that's great. This is like literally the biggest, I'm on a different chart, but this is like literally the biggest all-time cup and handle move ever to take place. So if silver gets back up here, we should have seen, this should look, if I was on the other exchange, it would show a longer time frame, but it would basically go back to the previous all-time high, which was like $50, and there's a giant cup right here, and then a handle right here, and we're coming back up for a potential breakout of that $50 range, and that takes us to like that massive measure move. So, but yeah, I'm going to take a quick break, and we will get back to it in a couple minutes, guys. All right, let's get it rolling back here. And for anybody new that has joined us, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So here, picking up with the gold-silver chart, this was our canary in the coal mine that more than likely gold was not going to be breaking out to the upside. Silver was not going to be breaking out to the upside. What this is the gold-silver ratio. You know, how many pieces of silver it takes to buy a gold, or how many pieces of silver you can get for one gold. You know, basically we have broken out of a downtrend where we topped out during the CVD scare at like 125 to 1. We bottomed out at like 65 to 1 roughly. And now here we are. We have broken out of the resistance in red here. We have broken out of the resistance in orange here after it has had clear interactions, multiple occasions with both those. And now here we are outside of it. We have retested the breakout. We have retested the breakout again. And now here we're starting to get a little momentum to the upside. If we break through this level at like 68 roughly where we're at now, we would expect that other level to act as resistance at like 70. And then next after that, we would expect like 75, etc., just to stair step up here. Eventually, I expect the measure moves to play out up to like 84 or potentially as high as 87 or like 93 based on the measure move of either one of these descending triangles or our Fibonacci retracement to the 0.5 of this move down here. At which point in time, I would eventually expect further downside. We are losing momentum here. We have lost the slope line. We got the hard sell signal. It's not unrealistic to think at this point in time that it could sell off. But if we zoom in here close, you'll see that we actually regain the red slope line with multiple green histograms in a row on the daily here. So we are potentially getting ready to roll this back over. We had a false alarm sell off here on red, and then I would expect like an elongated blue to the upside. You know, looks like basically this is just a long consolidation period before the next move. The question is the move going to be up or down? Well, let's look to the longer time frame and see what they're telling us. If we look here at the weekly, we're losing strength on the weekly right here. But a lot of times what will happen is the blue will come down to the purple and then it will bounce and then we'll see strength to the upside. Just like what we saw here. The blue comes up, it starts to sell off, it comes down to the purple, it bounces the purple, and then we get that parabolic move and the knife gets a massive stab to the upside. You'll see we got the hard buy signal coming out of that zone down here at the bottom, and then we have a bunch of green histograms in a row on the weekly. So again, we're above the red slope line. It is below the zero line. It looks like it's about to flip over blue. You know, typically when this flips over blue, we see big parabolic moves to the upside. This is our last one back here. We had a nice big move to the upside. Here we had another one with the blue. We had a decent little move. Here we had a nice little move, and then heavy sell-off during the red, and then here it flipped over blue again, at which point in time we had a nice move to the upside, a couple little like pathetic ones along the way, and then here we had a full-on parabolic one during that crash. So if this flips back over blue again, I would expect, you know, some sort of strength to the upside, and that is what I'm expecting. And then last but not least, if we look at the monthly chart, I know people like to look at the 5-minute chart, but if we look at the monthly chart, we can see what's actually going on in real life and long-term trends. And you will notice that the last time we were in the bearish control zone, it was at the absolute bottom after a massive parabolic sell-off back in 11? Well, depending when you're looking at, from 2008 to 2011, you know, gold got down to 30 silvers to 1 gold. So you could take 30 bars of silver and say, I'll take 1 gold, please. And then when we topped out up here, you know, gold got up to 129. So you would have to buy that same 30 at the bottom back here in 2011. In 2020, that took an extra 100 pieces of silver to buy 1 piece of gold. So we were at very, very low areas right here, like very, very high areas like right here. And now here we are back down kind of in the middle. So the question is, are we going down? Are we going to get a similar bounce like this and then further downside? I think yes, long term we are. But how long is this move to the upside going to take? I think probably a couple years of silver losing strength in relation to gold. But again, maybe I'm wrong. But, you know, the last time we were in the bearish control zone here for a little while like that, we went absolutely parabolic afterwards. Here we are back down in the bearish control zone again, showing our first sign of strength in green here. Here when we showed our first sign of strength, we had a nice move coming off the bottom there. So I think we could easily get a couple months at least of like a parabolic move to the upside, followed by continuation to the downside. But again, it's going to take a while for that to happen. We don't really have to worry about it because, we're looking at the 5-minute chart, trading minutes, not days or weeks or months, or even those years. I'll be there for you. Platinum, that fatty platty is losing some weight real quick. We had this massive channel in blue. We got the little channel in yellow. We broke down. We finally got our measured move. We did it, ladies and gentlemen. We're almost at the bottom of the 4, which would potentially be the top of the 1 here. That's where I'm going to start buying that platinum again. $1,000. Could we get down as low as the measure move of the big channel down here to like $850? We could. I don't think it's that likely, but we could. But I'm definitely a buyer for like that $150 range. I'll dollar cost average into the downtrend on the way down there. I still think platinum is undervalued. I think eventually this comes into line with gold, and I don't think gold's going below $1,000 anytime soon. So in all actuality, I think anywhere around where we're at right now is a deal on platinum. I think if you say gold's worth $2,000, platinum's worth probably $2,000. The question is like, if they come back to 1-in-1 ratio, like 1 gold is 1 platinum, is gold going to go to 7,000? Is it going to go to 2,000? Is it going to go to 5,000? Is it going to go to 1,000? Regardless, if it goes down to any of those levels, $1,000 for 1 platinum is eventually going to be a decent deal, I would say. So, but we'll see what happens. Again, we'll see what happens. I think platinum's starting to look pretty juicy. We're at a key level. I would expect us to find support here. We have, just looking back at the chart, we have like basically a top here, 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 bottom here. So is it likely that we find a bottom right here as well? We have a ton of support / resistance right there. So it's going to be tough to sell down too much more violently than we already have. So I do really like platinum at these levels. USAS doing what we were afraid of. I told you guys how I felt about this. I felt like we had a very high likelihood that we were going to get this move back to the upside. But in the event that this does sell off and, it ends up being a losing trade, it is what it is. Can't win them all. We are breaking down from a very, very strong area right here. Maybe we'll put in some bullish divergence. It looks likely at this point in time. Or we just get a massive sell-off like this again. And this thing just capitulates out the bottom. Again, depends what silver and gold do. I would rather see them going up, but I would rather buy them cheaper. So as long as I'm alive, I'm not mad if gold and silver go down, because I will just use them as my savings account. I do not plan on selling them. Sometimes I will trade paper. ACB, doing what we expected here. Topped out at like the 200 exponential moving average. We're basically back down, testing some of our other moving averages. We don't want to see it break down from this right shoulder and invalidate this pattern. But in all reality, I would expect it to get back down here as low as like $7. This was our shoulder. That's our neckline. That's our head. That's our neckline. That's our right shoulder. Eventually I expect us to get up here to at least $18, maybe as high as $35 on the breakout. But in all reality, this thing has been extremely weak. It's been going down for a long time. I don't like to pick bottoms often, but when I do, it's because I expect extreme upside over a long time frame, which I do expect on pot stocks. Tilray, there's still definitely some potential for a downside here. It's slightly stronger. Based on the moving averages, we're still above the 200 exponential and simple, as we are not with like ACB, for instance. But again, this thing is way down from its all-time high. I think eventually it goes back to its all-time high. I think it goes up to $300 or $1,000 realistically. It's at like $16.75. There's still a possibility we take out this low right here, and hit that 618. We kind of front ran it right here off the 200 simple. It's possible we break down from it. Maybe we go even lower than that. And, all of a sudden it's not going to look like that great of a trade, but still looks good to me long term. I honestly would rather buy the pullback right here and see it start showing some more strength. But if everything starts selling on violently, I expect pot stocks to do the same. Same with silver and gold miners, honestly. THCX, just going to be an underperforming version of those same things. We're still profitable in these trades. I'm not looking to like get out of them right now. I'm looking more to build like stronger positions, honestly. YOLO, even weaker version, same thing. Uranium, again, still looks like it's topping out. I was expecting this. We've been talking about this for a while. There's 3 drives of, actually, I don't think those were the 3 drives. There was a bunch of bearish divergence showing up in the chart here. This thing looks weak. It's way overcrowded of a trade. That's UEC, URA, same thing, way overcrowded. Everybody and their mom is interested in uranium. You know, we have basically same high on the indicator oscillators here, and then we have a higher high on price action. Again, some hidden divergence taking place here. I would expect bearish, obviously. I would expect this to continue selling off. We're getting the 821 cross to the downside. We have broken through a key Fibonacci level. You know, I think the moving averages are our targets. This thing could pull back decent, but again, it's so undervalued in comparison to its previous all-time high, but it operates in like 30-year cycles. So, you know, we're like 1 year into a bull run. So maybe we have like another year of downside and then like 29 years of upside, 28 years of upside. I don't know. We'll have to see. Cameco, CCJ, another uranium stock. Again, you know, divergence taking place here. Higher highs, same highs, same highs. Look, these things are way overcrowded. You know, we went into a bull run back here at like 10 bucks. It's still at 20 bucks, $19. It's up 100% still. I expect it to go up massively when uranium goes up. But the truth is, price of uranium has not moved that much. And now we have like new China nuclear leaks going on. So, you know, uranium's about to get flooded pretty hard if there's another like Hiroshima like taking place here. Oh wait, that's the wrong one. I think that was a bomb going off. Hang on a minute. Wrong FUD, guys. Wrong FUD. Copper, again, way overcrowded. Massive channel to the upside from our low back here. This is the CPER index fund. You know, we expected a potential break of the channel here after this. Everybody and their mom is bullish on copper because copper is the trade of the century. But the truth is, copper is the trade of the century, just not after it's already gone up a ton and everybody has already bought into it at the absolute top of the range. It's probably not the trade of the century then. Trade of the century here, still trade of the century, but not for like the next few months. I think it's going to sell off, and I think it's going to sell off violently back down to like 21 bucks. But I mean, at this point in time, you know, it was up at 30 bucks, goes down to 21 bucks. It's only down like, what, 33%? It's not even that bad of a sell-off, but it is if you bought the top. But yeah, I expect further downside. Lithium's still strong, but again, it just looks like a lower high right here. We're at unsustainable levels. We still have a slope line that's good. We're getting the hard sell coming out of the bullish control zone. I mean, I think this thing's going to sell off. I expect this to touch the 200 moving average, 57 bucks. Again, lithium in batteries, definitely in the future, but not right now. Lumber doing exactly what we've been saying, absolutely capitulating. We got down to our exact 200 exponential moving average, called that ahead of time, way ahead of time. Called the 200 simple moving average way ahead of time. We even got our support/resistance here at $837. I mean, we're hanging on for now, but, you know, are we going to keep hanging on? I don't know. We'll have to wait and see, guys. You know, I don't think lumber's going back down to like $200 per 1,000 board foot, which if you're not familiar with lumber, I know people are just finding out about lumber and pricing and how it works. It's the price per 1,000 board feet of like 2x4s. I understand that people don't care about lumber. Only now are people actually talking about lumber. But here we got up as high as like $1,700 per 1,000 square foot. Now we're back down at $844 or whatever per 1,000 square feet. Wait, is it square feet? Per board foot, not square feet. Per board foot of lumber. There's a good possibility that we base out around this area, and that's just what wood costs from now on. But we'll see. This is a lot of weakness in a row. I would expect this to start showing some kind of strength here. I would not start shorting lumber after it just had a massive sell-off. I do not think lumber is going to zero, but what do I know? Caterpillar, again, you know, breaking down from key levels as expected. You know, overcrowded trade as expected. You know, the volatility is not in the same way. We have gotten the measure move now. Do we base out here now and get a reaction rally back up to the upside to 225 or something? Yeah, we probably do. I mean, we got down to our target almost exactly. I mean, we got the measure move almost exactly. Got the fib move almost exactly. I mean, I'm not going to get greedy on this thing, but I'm also not going to just rush back into it. The last couple times we were in a channel like this, we lost 50% of our value over, what, from 2018 to 2020. So after this nice parabolic move to the upside, do we have like another 2 years of downside and, you know, another like 30-something% to the downside? Maybe. I mean, based on history, yeah, we probably do. And John Deere looking the same, slightly more bullish, I would say. You know, it hasn't had quite as violent of a move to the downside, but I do expect it to eventually. There's no reason. This thing actually was more bullish than Caterpillar, like the whole way up. So maybe it stays more bullish, but it's barely gotten a sell-off from the top here. I do expect it to hit either this key fib level at 292 or the measure move down here at 240 to 250. But again, you know, it's going to take some time. All these trades were just way overcrowded. Everything was way overcrowded. There was way too much easy money. There's way too many TikTokers talking about how they made millions, how they turned their stimmy into, you know, crazy amounts of money. Not realistic. Bitcoin closed the gap over the weekend. Here's our Bitcoin futures chart. All we did was sell off over the weekend, and then we moved back up, like basically like over the last 12 hours, closed the gap, opened back up where futures closed. Typical gap close weekend move. 2 days of, you know, red histograms basically getting rejected by the slope line. We could easily bounce this, and that's going to look like gold a lot, like in a lot of ways. You know, gold topped out, came down, and we started putting in like an inverted head and shoulders. We've got a neckline right here. We've got a left shoulder neckline. We've got a head. We got a neckline again. Here, are we putting in the right shoulder? Are we going to go lower? I don't know. You know, obviously there's a huge wick right here that kind of throws it off. But based on closes on the daily, you know, maybe we do get that head and shoulders break. And if we do get that break, you know, where's that going to take us from? Well, if we were at 30,000 and the neckline's around 40,000, maybe we get back up to that 50,000. You know, Bitcoin looks weak right now. It's hanging on. Futures is hanging on to the 200 simple, but we're below the 200 exponential. You guys know this has been looking like shit for a while. I've been telling you about the divergence since the absolute top. Still looks like shit. Nothing has changed. Matter of fact, the longer it doesn't look good, it looks bad. So the longer it doesn't go up, the more it looks like it's going down. Bitcoin daily. So maybe Michael Saylor and his $500 million can come in and bail out the Bitcoin market. But he is not a whale. He is a guppy. Okay, so Bitcoin. You know, we're in a channel as far as I'm concerned on this chart. I mean, again, we have essentially like kind of that like double dip shoulder right here, and then the head, and then like here's our first little right shoulder coming in. So, you know, do we find support on this area and then get continuation back up, get that neckline break above the 200 exponential, get through all these other moving averages and come back up to like 50,000? It's definitely still a possibility, but we're getting the hard sell signal. We got multiple daily histograms in a row. We're losing the slope line. I mean, it's weak. Shit's weak. And then obviously we are getting the actual death cross taking place. We do have to be careful because a lot of times when the death cross, the 50 and 200 simple, or the 55 exponential and 200 exponential, as I like to use it in crypto markets, often when that takes place, we do see the bottom of the market. We can go back and kind of look at that a little bit here. Our last death cross was the COVID capitulation back here. That was when our death cross took place. And look, this was the, if we look, let's zoom in a little bit here. If we look at the 50 simple and the 200 simple cross right here, that was already, the bottom was already in. If we look at the 55 exponential and the 200 exponential, that was literally at the bottom right here. So the death cross was the bottom right there. So you probably don't want to short that. And then here we see again the 200 simple being crossed by the 50 simple right here. And look, that was our bottom right here. Afterwards, we got a parabolic move to the upside. That was before our Bitcoin capitulation. You know, and then again, right here, the exponential, 200 exponential gets crossed by the, that actually saved the 200 exponential, 255 exponential cross. And then here we got the actual death cross here on the exponential. And here that was the actual bottom. We came down, retested again, and then, you know, went up since then by a nice percentage. And then once again, let's look way back to our last bull market death cross. And again, you will see the 200 simple moving average crosses right here. And that was basically at $6,000. And then the 200 exponential crosses the exponential right down here at $6,000. After that, we went from $6,000 back up to $10,000. So a 50% move to the upside after the death cross, followed by capitulation, eventually time capitulation, price capitulation. Time capitulation is where we just go sideways forever and people give up. You see the volatility coming out of the market in tighter and tighter range. price capitulation where it dumps and loses 50% of its value, and everybody gives up on Bitcoin. Your boy's over here talking about how great Bitcoin is and it's a buying opportunity of a lifetime, and then parabolic after that. So yeah, so be careful with those death crosses. Be careful with those golden crosses, because often they are obviously lagging indicators. Often the move has already played out and you are way late to the party if you try to trade those. Because what does the market try to do? It tries to avert them, because once we get that cross, you expect essentially algos and whatnot to trade like against the move. Here we are down in the bearish control zone. We have gotten now the weekly 821 cross to the downside. We are barely hanging on to the 50 exponential, 55 exponential, and 50 simple moving average. If we sell off from there, the target is 26,000. If we sell off down to the 200 exponential, the target is 17,000. 200 simple, 14,000. 377 is 10,000. If we go down to 10,000 again, everybody's going to give up on Bitcoin. It's going to be dead. Michael Saylor is going to pull out a bang stick, put it in his mouth, and hopefully the world will be free of him. No, I shouldn't say that, man. I honestly wouldn't wish any harm upon anyone, but, I don't like his little bullshit that he's pulled. I think, honestly, people like that, getting other people to drink the Kool-Aid at the absolute top, trying to prop up the price on his own, total bullshit. Sell by sell, divergence indicator at the top of the range, leaving the bullish control zone, all red histograms. We have literally not had a green histogram since the top. Holy shit, TJD TDMACD is fucking phenomenal. It has literally told us the absolute top. Oh my gosh. The Jewel Thief, phenomenal. Called the absolute top with the divergence buy signal at the absolute top. Never got a candle close higher than that. Afterwards, capitulation. Saved you 50% of your money if you're using it. If not, you're probably down 50% on your position. But overall, you should be up, because hopefully no one that's watching this bought in at ridiculously high prices. But overall, looks like shit on the weekly. And finally, the monthly. We got 10 days left to try to get above the moving average. We want to get above the 8 moving average at 37,600. We're still pretty close to it. We're within like 5-10% of it. We did flip over the parabolic SAR to red, though, on the monthly. That is not good. Typically is months and months and months of sideways action or down action after that. You can see we did have the one false alarm right here where we got 4 in a row, and then we broke out to a new all-time high. And then you'll notice right here we had one false alarm where we basically got 7 in a row, and then we broke out to a new all-time high. So did this move already take place and we've already topped out, and now we're going into an elongated 1-year plus bear market and massive capitulation? Maybe. About to get the hard sell signal on the monthly. We have left the bullish control zone. There's not a ton of monthly hard sell signals, but the last time it happened was the absolute top at $20,000. We're about to get it again at, $35,000. 2 red monthly histograms in a row. 2 red monthly histograms in a row last time led to, a loss of basically 66% of value. Or if you go from the top, 80+% of value. Altcoins will capitulate. Many of them will die. We just had the Shark Tank blow up. Look, it's very unfortunate that you have basically a billionaire shilling some trash bag coin, and then afterwards, when it goes from $60 to $0, saying, well, I guess I just didn't do my homework and we need more regulation in the space. Don't listen to people that are already rich, beyond like anything most people will ever see in their life. No offense to, old Marky Mark, but the truth is, man, you probably screwed over a lot of people for a lot of money. But, don't listen to famous people. Listen to people that know what they're talking about. Can't stand influencers like that. Sucks for people, but it is what it is. It's a tough lesson. Hopefully they learn it and move on from there and don't give up on investing. Ethereum looks like trash. Now this really looks like a descending triangle. We have a high, we have a low, we have a lower high, and now here we are back down at that low again. It looks like basically, if we get the breakdown from this thing, it's going to go way down. There's not a ton of support built up under it. We do have a decent amount of like chop through this range, so I expect us to bounce these moving averages. We have sold off a lot already, so there's a high likelihood we get the move back to the upside, but it looks stronger than Bitcoin, but it looks like trash. All crypto looks like trash right now. Doggy coin looks like trash. It has been selling off violently. If it breaks down from this level here at like 24 cents, I expect it down at, 8 cents very soon. So, you know, if you made millions on Doggy Coin, hopefully you put some of them millions in the bank, because really soon your millions are about to go down to thousands. Not financial advice. BNB, you know, again, got up here to ridiculous levels at 677. Still looks decent above the 200 exponential moving average. Losing the slope here. Still looks stronger than Bitcoin. Does have utility. But let's be real. If we break down from this level at like 200 bucks, which is still a ways down from here, but if we do break down, there's no support back down to like 50 bucks. So, are you ready for BNB to go to 50 bucks? I would take some profits. Or just hold it. Just hodl it. Hodl it, guys. Diamond hands. We're the apes. Link looks like trash. Still at that $20 level. Holding on to that previous high back here. But again, all this stuff just looks weak. It's pointless to even look at it. It's just going to do what Bitcoin does. Bitcoin looks like it's getting that bounce. Looks like it's at least bottomed out on Bitcoin dominance for now on the weekly. We're getting the hard buy signal. We're coming out of the bearish control zone. Last time that happened, it went, you know, decent percentage move, pump to the upside. Time before that, decent percentage move, pump to the upside. Time before that, decent percentage move, pump to the upside. Time before that, decent percentage move, pump to the upside. So what do I expect to happen? Decent percentage move, pump to the upside. Multiple green histograms in a row. Still is in a clear downtrend. Still looks like Bitcoin dominance is basically going to continue falling, as that's all that it's done since its inception. Started off as 100% of the crypto market space and got down as low as 35%. This bull run, it got down as low as 40%. So maybe now it's going to like form some kind of support here, and then the next bull run, it's going to come back down slightly higher. But overall, this thing is in a confirmed downtrend, clearly well below the 200 exponential and simple moving averages. On the weekly, looks like it's showing some strength. It has flipped over the parabolic SAR to the upside. I do expect it to gain some strength. Total market cap on the weekly, we're about to get the 821 cross to the downside. It looks weak. If we sell off from this level, you know, we have a little bit of support built down here at like 1 trillion. We're up at $2.6 trillion. We're down at $1.5 trillion now, and the next target is like 1 trillion. If we lose that 1 trillion, we get back down to like 700 billion. All red histograms. You know, divergence signal, sell by sell, leaving the bullish control zone. It looks like crap. It looks absolutely terrible. Crypto market cap looks horrible. Coinbase, looks okay. We were able to close the last daily last week at the moving average, but we got the sell buy. Are we just going to get the sell signal now, and then it's just going to sell back off? There's definitely a possibility. We're back at the entry right here. You know, I don't hate this trade right now, but I really wanted to see this hold above the 8 and bounce off the 21 a couple times, potentially break to the upside. It's possible we get a little move like this, but I'm really losing faith on this old Coinbase trade right here. Riot blockchain, looks like it's topping out. High, 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 high. Every high is lower than the high before it. What do I expect to happen next? Low, 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 new lower low. You know, it's just going to do what Bitcoin does, though. We're getting the hard sell signal. We're showing a bunch of weakness. All this stuff looks weak. MicroStrategy is holding for now. You know, it looks like it's essentially trying to do a confirmed breakout here. The measure move is going to take it back up to that previous high right there. This actually looks decent, somewhat decent. I have no interest in it. I think a lot of this is probably just people that don't understand that MicroStrategy buying this new $500 million in Bitcoin is not going to be this MicroStrategy stock. You know, it's basically MicroStrategy LLC, not MicroStrategy Incorporated. So that extra Bitcoin has nothing to do with the Bitcoin on the balance sheet of this MicroStrategy. But again, what do you expect from a Kool-Aid drinking or Kool-Aid serving cult leader? And just a reminder too, just to remind people why I hate Michael Saylor and I think he's a bum. During the 2000 bubble back here in 99, the stock was down at $82. He was able to basically pump it up to $3,294. After the pump and dump was done, his company, and then he got in trouble with the SEC for illegal practices and paid millions of dollars in fines. You know, so he's clearly a scammer, piece of shit, according to the SEC, not just me. At which point in time, his stock went down to $4. So it went from $3,252 down to $4. So you want to see what a 99% dump looks like. 99.87% down from the all-time high right here. So if you didn't sell the top, you lost 99.87%. Let's call it 100. Let's call it 100, guys. Lost 100% of your value. So Michael Saylor is a piece of shit. I would never buy anything that he is selling, that he is buying, that he is endorsing. Obviously, he makes me jaded towards Bitcoin, and I like Bitcoin. But he's an absolute bum. His stock went from $100 back here all the way up to, let's see, $1,300 this time. So he was able to 10x his stock by buying Bitcoin on the balance sheet, not have anything to do with the actual underlying company. He is a full-on scammer. And now look, we have the sell, buy, sell divergence signal on the monthly. Michael Saylor's stock is going to zero. Michael Saylor is a zero. And remember, his story changed too. Before he was about conserving value. He didn't want to lose the value on his balance sheet. Now he's all about leveraging and buying Bitcoin with leverage. So why did his story change? Because he's trying to pump it up. He's trying to keep the bubble inflated as long as possible because he knows he will never get out in time. And if Bitcoin sells off, if MicroStrategy sells off, he will probably be under investigation again with the SEC. He probably already is. It's just a matter of time. Portnoy is probably on the list too. Musk is probably on the list, but he's too rich for them to ever do anything. GameStop looks like crap. About to get the 821 cross to the downside. Sell by sell. Divergence signal at the top of the range. All red histograms. GME, GameStop, total piece of trash. Hit the measure move perfectly. At which point in time, you should have been out of this at $340. It's already down substantially since then. GameStop is garbage. GameStops are not coming back. AMC, let's see what the apes are doing. They're doing a little better than the GameStop gurus or whatever, but the AMC apes are a bunch of trash bag losers. They do not understand fundamentals or technicals. AMC is garbage. Movie theaters are not better now than they were ever in the past. There's no reason for AMC to be at new all-time highs. There's no reason for it. It's total trash. Movie theaters are going away. The best case scenario for movie theaters is that they allow you to drink, smoke, and Netflix and chill inside of the movie theater, or maybe they bring back intermissions or drive-in theaters. Movie theaters are trash. Bed Bath & Beyond, doing the same thing Bed Bath & Beyond does every time. Pumps up and then gives back the majority of the move. Pumps up, gives back the majority of the move. 821 cross to the downside. Another meme stock getting ready to die. DraftKings. So Queen Kathy called the bottom. The market said maybe. I'm not sure what her entry was. She bought 40 million in DraftKings. Keeps trying to carve out bottoms on these things. Got the hard sell signal. I expect this thing to roll straight back over. 821 cross. We're below 200 exponential moving average. She claims to have all these analysts and technicians working for her, and then she reveals that they're all straight out of college. None of them have any real life experience. Most of them have probably never had a job before. They probably got their undergraduate degree and then went into a master's program and then got hired by Queen Kathy. I do think in the long run, Kathy will do all right with her. I think she'll do all right with what her ideas, her plans, genomics and innovation and all these things. I honestly do. But you can't just try to buy the bottoms of everything and just say now it's the bottom because I bought 40 million and I'm going to tell everybody. Eventually her clan stops drinking the Kool-Aid. We are very close to a death cross. We have already gotten the death cross on DraftKings on the simple moving average. It's just a matter of time before we get on the exponential moving average. I think DraftKings going much lower. There's some support down here, obviously at $40 and then again at like $35. I called this move out ahead of time that it was getting ready to capitulate. At this point in time, it just looks like a lower high. I don't think it's just all of a sudden going to take off to the moon. We do have some strength on the TJD, TDMACD. This is an ideal level. Maybe it sells back off here for a little bit, puts in some bullish divergence, and then moves back to the upside. But to me, what's this look like on the daily? It looks like we're in a very strong uptrend for a long time, and we're losing that uptrend. So what's likely to happen? Let's pull out our handy dandy drawing tool. Well, let's just draw along these 200 moving averages. Look, we're going up, we're going up, we're going up, but we're going up less. Oh, look. Oh. That's what it looks like is going to happen. Maybe not that violently, but you can see that we are rolling over. And typically, when the ball rolls to the edge of the table, it falls off. And it does so violently. So, all right. That's all I had in mind for today, guys. I hope you enjoyed it. I will jump over in chat for a minute and holler at you guys before I get out of here for the day. I expect a ton of action this week in the charts. I expect mad volatility all over the place. I expect crazy, crazy moves. I'm super excited for this week in the markets. I will 100% be back on Wednesday for our mid-week market update. I appreciate everybody that tuned in today. And yeah, man, everything is bubblies, 100%, dude. Everything is just garbage at the moment. Exactly. There's like nothing the only chart that we looked at tonight that looks good. The US dollar looks good. Oil looks good. And I think PayPal and Pinterest look good. And PayPal and Pinterest will probably just top out for a lower high. We'll have to see what the dollar does because there's a ton of resistance above its head. And oil is still down like 50% from all-time highs. So oil is probably the best chart we looked at today, honestly. Oil is probably the best chart. Second best chart, probably the dollar. After that, Pinterest and PayPal. But the truth is, man, you know, in my opinion, in my honest, humble opinion, you know, it's the 20th of the month right now. We got 10 days to go until the half is over, basically. You know, the quarter is over, the half is over. People are going to be rebalancing their portfolios. There's tons of weakness all over the place in these markets, tons of uncertainty. The reopening trade looks like it's done. Markets look like they're potentially getting ready to roll over for a serious correction. In my opinion, taking the next like week or two off from, you know, buying or contributing to your positions or IRAs or whatever is, you know, in my opinion, for me, that's probably what I'll be doing. I don't see a lot of upside stuff. And honestly, I prefer to trade things to the upside as opposed to shorting them. I'm sure I will take some little scalp trades along the way or whatever, but I'm not seeing a lot of potential in this market, in any of these markets right now. And honestly, it makes sense, man. There's a ton of uncertainty. Like everybody was like juiced up on the Fed, and then the Fed didn't even come out hawkish at all. All they did was come out slightly less bullish. They're like, instead of talking about, you know, rates and purchases, we're gonna just talk about them at the next meeting a month from now, and then we're probably gonna do them in like 2 years. Like, that's still so dovish, and that made the markets like lose strength. Like, I think we're literally just like a pin away from the prick of the bubble. I mean, and most of these things have looked like they were topping out and have told us like clearly they were topping out. So I'm honestly not surprised about any of this. Yeah, I'm super excited for the new half, man. I'm excited for everything. Like, there's tons of awesome stuff going on right now. There's tons of crappy stuff going on right now. It's kind of up to us to just kind of pick what we want to, you know, do we want to be excited about the good stuff, or do we want to get bummed out about the bad stuff? I'm excited for the summer. I'm excited to get out there, get that sunlight, you know, enjoy the outdoors. I'm excited that, you know, places like California have quit their lockdowns. There's tons of cool, exciting, fun things to see here. But at the same time, you know, there's also a lot of negativity or whatever. So, you know, keep your heads up. To anybody out there, you know, I know people don't like to talk about it, and a lot of people like struggle with mental health. And I know these, you know, this last like year plus has been bad for a lot of people. And, you know, my heart goes out to you. Like, there's tons of places you can reach out to, you know, if you're feeling any, you know, bad thoughts or anything like that. Like, shit, I mean, I'll always talk to anybody that needs somebody to talk to or whatever. I can always find some kind of positivity in anything. So keep your head up. You know, it's not the end of the world. Things will get better. It always seems like the darkest before the dawn. You know, this has been a terrible year for a lot of people. They lost people they cared about because of, you know, CVD, or because of drugs or suicide, or maybe they lost a bunch of money in whatever, you know, maybe they bought the top, maybe they didn't buy in the whole way up because they were waiting for a pullback, whatever the situation is. Maybe they were saving up for a house and now house prices are way up. Like, it's okay. Things will get better. It always sucks, like, for a while. And then you look back later on and you think, damn, it wasn't even that bad. I don't know why I was even worried about it. So keep your head up. I like to think our channel is like pretty positive overall, And I like to think that, you know, you guys are taking the time to learn technicals and actually put in the work and everything. So I imagine most of you guys have done pretty well over the last year, like financially and everything. But there's always other underlying things going on. So keep your head up. If you ever need somebody to talk to, you can always reach out to me. My email is, you know, in the on the channel, so you can always hit me up. You can always, you know, put a little air back in the old happiness bubble for you if you need somebody to talk to or whatever. Soon we'll have the group back up and running. Very soon, very close to that. Reach out to me if you haven't already, and I will get back to you. I know I've been saying that for a while, but I do have everybody's stuff flagged, and I will get back to everybody. I've just been busy as hell. So, but this week I will definitely do it because I want to give people some notice before the group is back up and running. But 10 days and counting, ladies and gentlemen, before the Crypto Trend Trader group is back in action, better than ever. We will start seeing course content coming out as well. You have early access to it and free access to it in the group. I'm super excited. Definitely looking forward to direct interactions with you guys, although I have been enjoying the live streams and will continue on the live streams. But it's definitely fun being in the group and doing our little scalp trades and, you know, being able to bounce some ideas off me like whenever you need to, or bounce them off each other, or pin up like cool articles or whatever. I miss a lot of stuff because I don't have social media. So it's cool seeing when you guys post stuff like that up as well. So maybe I missed some cool article or whatever. Told Mark Cuban and his followers, hey, if you bought into Mark's Kool-Aid, drank it, lost a bunch of money, fuck Mark Cuban. Get on the Crypto Trend Trader train. I'll take care of you guys. I'll look out for you, and I will never shill some bullshit and fuck you over. The same way I will not shill some bullshit crypto or exchange or whatever trading bot or whatever. I literally get, I have a small channel and I constantly get hit up with that stuff, constantly get offered thousands of dollars to shill that stuff, Bybit, exchange or whatever. I don't want to call anybody out by name. I shouldn't have done that, but you know, most people who do that stuff are doing it to make money off you. They don't give a damn about you. So learn the technicals, put in the work, and it will benefit you for the rest of your life. So, with that, I'm going to get out of here, guys. Appreciate everybody tuning in today. Appreciate all the likes, subscribe, share it with your friends, share it with your dog. You know what it is. Use those paws, smash up the like button, and I'll catch you guys on the flip side. See you all on Wednesday for our midweek market update. I do expect a ton of volatility this week. I'm super excited for this trading week, and you know, we'll have to see what happens. Maybe the market starts showing some strength this week, and we get a nice little trade in on Bitcoin. Maybe we got like one of those reverse head and shoulders playing out on like Bitcoin or on gold, and you know, we just hit the moon after that. We'll have to wait and see though. Don't want to get overly excited. The longer these things show weakness for, the longer I expect them to show weakness for. So everybody keep your head up, keep your balance up, and you know, make sure you hit that thumbs up. Crypto Trend Trader, and I'm out of here.